Good afternoon. My name is Aaron Jacobson Swanson. I'm the president of CFA Society Atlanta. I would like to welcome you all to our online series, Financial Modeling Best Practices, 10 Tips to Build a World-Class Model. I also encourage you to join us and register for our 3 upcoming online series. This Saturday, March 27th, we have our inaugural Ethics Challenge from 10 a.m. to 2 p.m. On April 14th, we have the Future of Sustainability and Investment Management, Research and Tools. And on April 14th and the 15th, we have Data Visualization and Business Analytics with Microsoft Power BI. We are joined today by Julian Kupilari, Business Development Manager of the Financial Modeling Institute, and today's speaker, Ian Schnoor. Ian is the Executive Director of the Financial Modeling Institute. In this capacity, he works closely with the entire FMI team on the creation and execution of its strategy. Ian is also a principal and founder of the Marquee Group, a leading provider of financial modeling training to professionals in the financial community. Ian has built the Marquee Group into a leading provider of financial modeling, training, consulting, and accreditation. Please submit your questions to Ian via the Q&A feature within your Zoom controls at the bottom of your screen. Without further delay, I give you Ian Schnoor.
Thank you, Aaron. Thank you, Aaron, for the introduction, and thank you, Kathy. And a big thank you to the CFA Society of Atlanta for having us in here today. Guys, we're really excited to be here in Atlanta, well, at least virtually in Atlanta with you to lead this webinar. We have been leading this webinar all over the world through CFA societies. This is probably the 25th time that we have led this webinar to CFA societies, and really excited to be here with you today. So just a couple of housekeeping items and introductions before we get started. First of all, I know that I'm not seeing you, but when you see me look over to the right, over this way, I'm looking at you. I'm looking at your names. I've got a list of all of you here. So there's a nice number of you in attendance, which is great. I can see you all, and I can see if you raise your hand. So I actually like to keep it engaging and interactive. So just help me out just to start. I just want to make sure everyone can hear okay. Can you just do me a favor and raise your hand if you're comfortable, ready to go, if you can hear okay, if the audio is fine. Okay, excellent. I'm looking over, I can see. Excellent. A whole bunch of your hands are going up. Fantastic. So you can hear, you can see my screen. Excellent. So what we're going to do is get right into this webinar. Again, thank you for joining us here. I've got a full packed webinar, and again, with my colleague, Julian. So the plan here is that I'm going to lead this webinar. We're formally scheduled from 12 to 1:30. I'm going to try to stop around 10 minutes early, around 1:20, to leave some time for questions. If you have questions, please put them in either in the chat or in the Q&A feature, and Julian is going to organize them, and he and I will discuss the questions in the last 10 minutes. If there's lots of questions, we're happy to stay a few minutes late, and we're not in any rush if people want to chat afterwards. Okay. Some people are still filtering in right now as we jump in. So let's start with a little bit of an introduction. I want to let you know why we're here, what the purpose is, and why we're leading these webinars, and a little bit more about who I am, and then jump right in. Promise I'm going to pack this in with all sorts of ideas. And in fact, today's webinar is called 10 tips, 10 actually very simple tips, 10 simple tips to build a world-class financial model. I have spent the better part of the last 20, 25 years working on thinking about financial models, teaching financial modeling, and I've tried to distill down in this webinar my 10 favorite tips that will help elevate your financial models to being truly outstanding and best in class. So I'm going to jump around here a little bit. Oh, last thing here quickly. All of the materials that I show you here today, so there's a slide deck that I'm going to be presenting a little bit. I'm going to be showing you a financial model in Excel. I'm also going to be taking some notes in an Excel spreadsheet. All of those materials we're going to send to you afterwards. So we'll send them to the CFA Society, and then they will share them with you later today or tomorrow so that you can have access to them. Let me jump here a little bit and just, again, show you my page on me, and just so I can give you a little bit more as and Aaron did the intro. But as you probably heard from Aaron, I started my career in investment banking. I worked for a number of years at a bank called BMO, and then I spent a few years at Citibank. It was Solomon Smith Barney back then, but now part of Citi, and doing traditional capital markets IB type work. And around 20 years ago, I left banking and I started this business, the Marquee Group. And as Aaron mentioned, at the Marquee Group, we're a training firm. We run training programs all over the world at banks, pension funds, business schools. We teach skills in advanced Excel, financial modeling, the real discipline of modeling and what that really means, data science applicable to finance professionals, and so on. But what happened, that's not the capacity that I'm here today. Today, I'm here as the executive director of the Financial Modeling Institute. What happened a number of years ago is we started noticing that lots and lots of students were putting on their job, on their resume, that they had attended a course. They might say they took one of our courses or someone other vendor's course. They were trying to signal to the market that they had strong modeling skills, but there was no way to truly prove that they really did have strong modeling skills. Simply taking a course doesn't guarantee you have strong modeling skills. And so we realized that there was no true independent validation, if you will, of financial modeling. So we went out with some other organizations, and we've created an organization around 5 years ago called the Financial Modeling Institute. And I'm not going to talk about it much today. You'll see the information in the slides, but think of the Financial Modeling Institute much like the CFA Institute. Our main goal is to provide rigorous exams, 3 different levels of exams in the field of financial modeling. There's a whole bunch of slides here that I'll show you in the back, just so you're aware that they're here. All of the exams used to be in person, just like the CFA exams. But because of COVID, we moved everything to be virtual. So the exams are offered 4 times a year. The next sitting is at the end of April and then July. And now they're done proctored in a controlled environment from home or from work or from wherever you want. You can write the exam in a controlled environment. And we're getting a lot of interest all over the world. What I was just going to share with you now is here, the last few slides, when you have a second, if you're interested in learning more on your own, there are a bunch of slides on the FMI, and you can see a little bit more about who we are and what we're doing to help prove people's modeling skills. So why are we here today? Because this, just out of curiosity, out of a show of hands, how many of you are currently working on the CFA program? How many of you are currently candidates? You can raise your hands for me. I'm looking over at your name again and your list. Is anyone here currently working on your CFA designation? Great. Okay, a few hands are going up. Excellent. I'm guessing most of you are members. I have my CFA designation as well. I did it many years ago. We have built a very close relationship with the CFA Institute. And the CFA Institute told us that the number one request of candidates around the world for the CFA program is they are asking the CFA program to add modeling into the curriculum. And the Institute has told us that it's really not possible. It's not going to happen. It's just too much additional content to add into the CFA program. But it's amazing. Even the former CEO, who we got to know well, told us that it was a huge request. People really want to see modeling as part of the CFA curriculum, but that's not possible. So we're thrilled to know that we were around, and the CFA Institute has been very supportive of what we're doing at the Financial Modeling Institute, because they want to make sure that this is available to people who are interested. And that's why they've encouraged us to lead and develop webinars for societies around the world. So today's webinar is topic number 1 on financial modeling best practices. 10, I'm going to show you simple tips to build a world-class model. We've already been rolling out topic number 2 all over the world. It's been really well received. So if you guys like what some of the tips today, we're more than happy to come back and do another one on skills to check and review a financial model. Just out of curiosity, how many people here have ever had to check or review somebody else's model? You want to just give me a show of hands? I'd love to see how many of you, right? See John, right? Chris, a bunch of hands going up, right? Thank you. You know, it's not a lot of fun. It's not usually a lot of fun to have to review someone else's model. And there are a whole bunch of skills. I actually sort of have another list of some of my 10 favorite skills to check and review other models, to make sure that if there are errors, you're going to catch them. And so again, if you're interested, would love to come back and lead this one. And we're doing this to help just improve people's general skills in the world of modeling. So that's kind of a little bit of an intro. Let's jump in now. And I think I already mentioned this session is being recorded. So if you have to drop off early, you can kind of come back. So, and watch it again. It'll be posted on the CFA Atlanta site. So I'm now going to jump in and talk about some of the best practices. We're going to do this up until around 60, 70 minutes and then take some time for questions. But again, guys, if you have any questions, you're always welcome to email me directly or Julian. My email address is here in the slides and in the Excel file that I'm going to be keeping. I guess the one comment I want to make just to start is that financial modeling is really a discipline. It's its own discipline, and it's becoming much, much more important in the world of finance and accounting, to be honest. Just out of curiosity, how many of you have ever looked for a job? How many of you have ever been looking for a job, and in the job posting, it actually said right on the job posting, you know, we're looking for business students, maybe an accounting background, but we also want to see strong modeling skills. Has anyone ever seen that right on a job posting? I'm looking over at you now. Yeah, right on. Thank you. A whole bunch of you are putting up your hands. It's pretty amazing right now. Yeah, thank you. Right. Can see Larry, Joe, your hands are going up. Right on job postings now, companies are saying we want to see modeling skills before we even hire you. Can I tell you something? That's new. That's brand new. And by brand new, I mean the last 5-7 years. Before that, nobody ever made modeling a criteria. They just assumed you would figure it out. But now it's so important that people want this in candidates before they hire them. They want to make sure people have skills when they're in the job. So I want to talk about the 10 tips in the context of the fact that it's its own discipline. I want to get into that here in a moment. And I'm going to start by just sort of simply asking, what is a financial model? And just again, before I put down a note here, one more question for you for the time being. How many of you have built some models on your own, let's say from scratch? How many of you have had to build some models, financial models in Excel, of companies before? Oh, a bunch of hands going up, a few anyway. Okay, excellent. A bunch of you have done some modeling. Some of you probably have not. Guys, wherever your skill level is right now, I'm hoping to leave you with some ideas that will help you elevate from your current standpoint. Now, I always like to start a seminar like this by asking, what is a financial model? Sounds like a silly question, but you know what? I get a very wide range of answers when I ask this question. And you might think of it as, an Excel tool to simulate a company, right? And it is all of that. But I would jot down one very simple thing here. When you think about a financial model, really all it is, I like to say, is simply a forecast. That's it. All we're doing is building a forecast, usually of a full company. Sometimes we're just forecasting projects or opportunities, but typically we're forecasting full companies. And that's it. All we're trying to do is take their historical financial statements and forecast them into the future. So then the question is why? Why do we do that? Well, again, sounds like a silly question, but I will tell you that this has changed a lot in the last 10 years. And I've seen it, in all the work that we've done with large organizations. I can tell you that in today's day and age, models have easily become the most important decision-making tool in finance. Financial models have become the most important decision-making tool in all of finance. They're used to make absolutely critical decisions that we need to make about companies, about opportunities. So very quickly here, types of decisions that people are making with their models. Well, a lot of people think of models as being used just for valuation purposes, and they are. Models are often used for making investment decisions, valuation decisions, but that's not it. That's not it. I was chatting with Aaron, who introduced the webinar here today, who's the president of CFA Atlanta, told me he works in, a credit group, in the real estate sector. And so he's obviously using models, not so much for valuation purposes, but to make credit decisions. Some people are even using them to make leveraged buyout or LBO, which just means a lot of debt, a lot of credit, understanding that. We use models to make decisions about risk and volatility of businesses. We use models to for internal budgets, and for planning purposes, we use our models to help make internal operating decisions. We use models for mergers and acquisitions work. So lots and lots of types of decisions are based on the models that we build in Excel. Sounds really simple. All we're doing is building a forecast, but there's a problem. And this is why we're here today. The problem is that most financial models, at least of the hundreds and hundreds that I've ever seen, most financial models are a mess. Most financial models are not easy to use, and it makes it very difficult to make good decisions with those models. Many models are fraught with errors and mistakes. They're not well designed, they're not well organized, and it makes it really hard to make powerful decisions. So what my promise today is that if you can internalize and think about some of these 10 ideas, you'll be in a position to make stronger tools that can ultimately be used to make better decisions. And that's ultimately the goal. You know, when we come back to the slides for a second, modeling, the reason why I like financial modeling, and I hope that you guys all enjoy it as well, if you start doing it more, is because it's a very multidisciplinary skill set. To be a good financial modeler, you have to have a whole bunch of different skills and then be able to pull them all together. So as an example, we need to have good Excel skills. That's just a prerequisite because most models in a corporate world are built in Excel. So we have to understand Excel really, really well. We need to understand design. I'm going to tell you guys the number one reason why models fail is because of poor design. They're not well designed, not well organized, and they make it very difficult to use. We need to have some good accounting skills. Just out of curiosity, guys, I'm going to ask you again, how many of you here are accountants? Does anybody here have any an accounting designation by any chance? No, not many, not many hands going up. A couple. You don't need to be an accountant. I'm not an accountant. I teach accounting. I don't have an accounting designation. You don't have to be an accountant to build a good model, but you need to understand the integration of a company's financial statements. I've had people tell me that the best way they ever learned accounting was by building models because it forced them to think about all the elements, how the working capital flows through, how the subsidiary accounting flows through all the financial statements. And of course, we need to understand finance. Our job is to pull it all together into one beautiful, cohesive tool. Now, coming back to my notes here for a second, what I will tell you now is we very simply said that a good model needs to work. We said that a good model has to be allow us to make a powerful, important decision with confidence, with accuracy. And so what I want to share with you before we move on is this, is a good model needs to work in two ways. I will tell you that a good financial model has to work in two different ways. And if it works both of these ways, it will likely be a very powerful tool for you. And if it doesn't, it might not. So what are the two ways that a good model needs to work? Number one, it needs to work electronically. And when I say electronically, I mean that every formula must make sense. Every single formula has to be logical and it needs to make sense. Guys, quick question for you. Has anybody here ever looked at an Excel spreadsheet, clicked in a cell on the spreadsheet, and the formula was so long that it wrapped around and around? I'm going to take a look. How many of you have ever seen such huge formulas in spreadsheets that wrap around and around? Yeah, lots and lots of hands going up. Sure, we all see that. It happens all the time. Every time I audit and look at a model, we always inevitably encounter giant long formulas. That's not optimal. The user might have had strong Excel skills, but it's not optimal because it makes it very hard to audit, to check, to review. Often mistakes are caught in those types of formulas. So when I say a good model has to work well electronically, every formula has to be very clear and logical. We'll talk about that more throughout the webinar. And I'm also going to tell you that a good model needs to work on paper. Yes, on paper, or in today's COVID era, I would say, or as a PDF. I'm going to show you a model as a PDF here today. And the reason we say that is because most senior decision makers are ultimately going to make a decision based on looking at something on paper or as a printout, a PDF, in a presentation, if you will. It's very rare to make a major financial decision by opening up an Excel spreadsheet and with a bunch of people and playing with the cells at the spreadsheet at that time. So what I'm really saying is that a model needs to be a powerful communication tool. A financial model has to be a powerful communication tool. Very often, guys, people think of their models as a giant calculator. But I want to have you think about, change your mindset. A model needs to be a very powerful communication. It needs to tell a story. You probably never thought that you were going to be a storyteller if you got your CFA designation or worked in finance. But a model has to tell a story of your opportunity, your project, the company you're looking at dealing with, and allow people to quickly get to the point of being able to make that decision. So that's kind of some intro ideas, but this is how we're going to determine if our models work effectively. And now what I want to do is quickly jump into the 10 major tips and skills that will allow us to build really, really powerful models here. So again, I'm not going to stop on all these slides. Page 11, and you'll see these on your own. Again, a model has to be a really powerful communication tool. It's got to adhere to all these attributes. And over the course of this webinar, you'll see what I mean by being dynamic and really flexible and intuitive, obvious, so that it can be used and ultimately transferable. When a model achieves these goals, it creates a lot of credibility and it inspires confidence. And these are not always words that you hear when we talk about people's spreadsheets. So ultimately, we need to, one of the main things we want to keep in mind is keeping our life simple. Keep it simple. And that's often a major, major problem with models, which makes them hard to use. So we want to keep things simple. One way to do that is we need to make sure we never hard code. Just quickly here, this ruins models faster than anything. Guys, can you take a look at my screen? Does everyone see this formula that says equals A5 and then multiplied by 0.025 plus 4.9? Has anyone ever clicked in a cell and seen something like this before? I'll take a look. Has anyone ever seen hard-coded new numbers built right into a cell like that before? Sure, I'm sure most of you have. That's not optimal. That even people to me that have build themselves as very strong, experienced modelers, we sometimes still catch things like this in their models, which means it's very, very difficult for a client or reader to know what's going on. So we need to avoid this at all costs. That's just a standard table stakes. We want to ensure that we are making sure all inputs are entered in their own cells, labeled, because everything becomes difficult to use if we violate that. But let's now take a look at, this is the list of my top 10 favorite modeling best practices. This list is here. It's also in the Excel file, so I won't have to jump back and forth as much. I'm going to kind of take them two at a time, mostly. I'm going to review them. Just so you know, from a timing standpoint, guys, I need more, about 40 minutes or so to get through the first 5. And then the kind of last, 15 minutes here to get through the last 5. The last 5 are very important, but a little faster to get through. And again, I hope that you can think about these and think about whether your models achieve all of these and have managed all of these concepts in the past. And if they haven't, there's an opportunity to improve. The first thing I would say is this, this has nothing to do with Excel. I strongly encourage you to think modeling a little bit differently than you did previously. The first 2 tips that I have here have nothing to do with Excel. It says if you're going to build a strong model, it's so important to kind of step back and build a plan and use that as an opportunity to ask lots and lots of questions. And I'm going to put some notes here. Model planning. It's amazing, guys, it's amazing how often when we review models, it becomes very obvious that the builder did not have a sufficient plan. So I'm going to put here a note that says it is critical to properly plan and design a model before you get started. It doesn't need to take very long. On our team, we call it a scoping document. It's like a blueprint. It's the architectural blueprint of what the model is going to look like, what it's going to feel like. And what it does is it allows you to ask lots of questions. And they might sound like stupid questions, but you know what? They never are. I love this stage. This is my favorite stage, to be honest, because I get to show up, if we're starting a new model, and I get to ask people, what's the purpose of this model? Believe it or not, if you ask that question to 3 different people, you might get different answers. Different people might want the model to do different things. Where do I get my assumptions? How much detail do I need? And it's important to start fleshing it out and asking lots of questions, because the model builder sits right in the middle of the team, collecting data from everywhere. Now, what I'll tell you is that in our view, I think this will be very helpful. If you're going to build a strong plan, we like to plan our models in 3 very distinct steps. So I'm going to go through this very, very quickly and then let you have my notes when this is done. So I would say step number 1 is to identify what we call the major issues, or the key drivers, if you will. What are some of the major issues or the key drivers of the business? So what does that mean? Well, the key drivers are just the most important variables that can impact success or failure, okay, of the company. These are the most important variables that can impact success or failure. They're hard to forecast and they're hard to control. They can often be hard to forecast and hard to control, but they can have a big, big impact on the success or the failure of the company. Now, we're going to treat these in a very special way in just a couple of minutes. So often these are things like economic variables. This can be things like economic variables that are hard to forecast, things like inflation or exchange rates, or sales prices, if it's a commodity, right? Variables that can have a big impact on the up or downward movements of the business. It might be, let's say, even sales volumes, because sometimes sales volumes are hard to predict, hard to control. Let's talk about a company based in Atlanta, let's say Coca-Cola, right? So if I was building a model for Coke, what might be, and again, if we were here together in a group, I would ask you for your ideas, but what might be some variables for Coca-Cola that can have a big impact on the success or failure of their business? Well, I mean, for Coca-Cola, of course, they're selling product globally. I mean, I don't, other than being a consumer and a customer, I don't know exactly what how much of their volume is sold in different parts of the world, but they must deal with massive exchange rate issues because they sell locally. They don't sell in US dollars. They sell locally all over the world, but they report their financial statements, of course, in US dollars. And I know head office is in Atlanta. So there are a lot of costs that are based in the US. They also have issues around sales. If I'm working at Coca-Cola, I'm wondering, what are sales volumes going to look like over the next few years? Are people going to continue drinking very sugary beverages? Is it going to be a downturn? Are people moving to more health conscious beverages? I don't know, but these are variables that are going to be tough to forecast. And I strongly encourage you to think about them for your business. And we'll talk about how to treat these in just a few minutes. The second part of a planning process, I would say, is to make a list of every assumption. I would say make a big list of every assumption you need. And what we're looking for here is we're looking for consistency. We're looking for consistency. As an example, guys, sometimes we'll look at other people's models and we'll notice that they forecasted their revenues in 600 rows. They spent 600 rows in a spreadsheet building up revenues. And then for costs, they did it in 3 rows. So not reasonable consistency in terms of how they're thinking about one part of the business versus another. And this is going to include everything from how they build revenues, how they generate costs, how do the fixed assets work of the business in terms of CapEx and depreciation? How does that work? What about working capital? What kind of inventory and receivable needs does the company have? What about their debt? What about their equity? Let's make a big list of all the assumptions that we need. And I will tell you that your job as the modeler is to ask questions. It's not your job to invent the numbers. You're likely going to be working with your boss, your client, your team, and we want to ask good questions and collect the data. You know, modeling is actually, some people think of modeling as a very much a low-level job where people sit in a corner all day long just working on spreadsheets. I want to tell you that's not the case at all. I will tell you that a good modeler spends, if you were with me, I would ask you what percentage of your time would you think is working in Excel if you're responsible for building a financial model for any company? I would tell you that a good modeler spends approximately 50% of their time in Excel. That's it. So what is the rest of your time doing, right? The rest is spent talking to your team, to your client, doing research, presenting on the model, right? Selling your ideas. So the point is, building a model is so much more. It's much more than just working in Excel and building a calculator, a tool. The modeler is often becomes the focal point of the whole project because the model builder is the one person that understands everything and has collected everything into one tool. So that's why I want to emphasize this, because it's so important, and often this is lacking, tremendously lacking. The third part I would say is plan what it will look like on paper, right? Plan out what it will look like on paper when finished. I would say start like you would for a PowerPoint deck. Guys, quick question. How many of you have built PowerPoint slides in the past year? How many of you have had to build a deck, a presentation? Just looking for some hands to go up here, right? Nima, thank you. Chad, right? See some names. Chris, right? Excellent. A lot of us build PowerPoint decks. Again, here's an example. I wish I could ask you this, but it's okay. I have asked this question hundreds of times, and I always get the same answer. If you had to build a new PowerPoint presentation for a presentation you're going to make in 2 weeks, what's the first thing you always do? What's the first thing you always do when you need a brand new PowerPoint deck? Well, some people like to put up their hands and say, oh, what I do is I take my last one that I made, I just change the cover, make a few edits, and away I go. No, let's assume it was brand new. Let's assume it was a brand new PowerPoint presentation, something you never did before. What do people do? The very first thing most people do is they plan out the table of contents, right? They plan out, or they make what's called a storyboard. They think about what's going to go on every slide. What's the header? What do I need? What am I going to talk about on each page? And then once I've done that, I will go and you fill in. But you're trying to create a narrative, a storyline, and that's important. People don't do that with their models. And I'm here to suggest that it's a good idea, because if you do that, your model will come together really, really nicely, very effectively. So I really encourage you to think like this, guys. Spend a half an hour, plan out a model, and it will have tremendously powerful results in terms of the effectiveness of your model. Now let's take a look here at a model. I'm going to show you a model. This is a sample model. This is called the Henderson Manufacturing Model. We're going to send this to you after the webinar is over. I'm going to spend a little bit of time later walking you through it. But before I do that, what I want you to see is this model is around 15 pages long. If I was to print it, it lives on 5 separate tabs. But before I show you this model in Excel, I want to show it to you on paper. Now, if I was doing this in class with you, I might actually hand it out to you, the whole thing on paper, but we're together virtually. So I'm going to show this model to you on my screen as a PDF. Okay, I'm going to show this to you as a PDF. This simulates what it would look like on paper. Take a look here. It's around 15 pages long. It's just loading. Here we go. So look what I've got. I'm going to flip it very, very quickly, because I promise you guys, the very first thing a client will always do when you present them a model is they'll flip it. They'll start to flip it. I want you to see what happens when I flip to every page. I'm going to go very quickly. Okay. You'll notice that when I flip the next page, there's an executive summary. Don't look at any numbers. Just get a bird's eye view. I just want you to get a sense. The next page is some inputs and assumptions. I'm going to flip again here quickly. Again, I don't want you to stop. There's another page. This is what your client will do. They'll flip it very quickly. I have a scenario page again. I have a revenue buildup here. There's a revenue forecast, and then next is a cost forecast. I'm deliberately going quickly here just because I want you to see what is going on. I've got an income statement. After my income statement is going to be the cash flow, the balance sheet. What I like to do, you'll notice there are some page numbers at the bottom. I'm on page 10 of 15. What I always like to do in a class is I like to ask people, what is your impression? As I very quickly go through the pages, because this is exactly what your client will do when they flip it. Imagine this was on paper. What's your first impression? And what people often tell me, and what I hope you're thinking in your mind, guys, I hope that the only thing you're thinking right now is that it feels pretty organized. I hope you're feeling like it's formatted reasonably nicely. I hope you notice that I have a header on every page and a footer on every page that tells us things like the location and the page numbers. And again, a title and a subtitle on every page. Did you also notice that the font is the same and it's consistent size? My point is that this is supposed to feel like a bit of a presentation. It starts with a cover page and it works its way down as a bit of a deck. So many people over the years have said to me, Ian, did you build this in PowerPoint? No, of course not. This comes right out of Excel like this, and it needs to, because this is what's going to inspire confidence in the reader. So now what I want to do is I want to talk to you. I've showed you what this model looks like if you were to print it. If you drop this on someone's desk in paper or PDF form, and it's immediately polished and presented and formatted, they will immediately feel good and feel confident about what you're doing. And that's critical to start that way. So let's spend a moment here talking about, before I get back into the 10 tips, I want to talk about optimal model flow. This is part of the ideas that I want to share with you. What does it mean for optimal? How do you optimally design a model? I told you that model design is one of the critical areas that's lacking. So how do we optimize the flow of a good model? Well, I will tell you the first thing we typically want to include is a cover page. And I know that sounds silly, but I will tell you that most models do not have this. Most models do not have a cover page. It's so easy. It only takes 5 minutes to make. But why is it so important to have a cover page? It just tells the reader that this is a financial presentation. It's not just a giant calculator. What should you include on the cover page? Whatever you want. Include the client name. You can put a date. You can put your name, logo, etc. Whatever you think will be helpful. It sets the stage. And it's a very powerful way to get things started. Now, if you are going to include, very often people like to include dates. If you are going to include a date in the cover sheet, right, you'll notice here that our model has a date. It's an old date because this is the date that when we last updated this model, June of last year, is when it was printed. This is when it was printed. In Excel, though, you're seeing today's date. So what's going on here? There's only two ways to enter dates in Excel. All right, I'll put it here. There are only two ways to enter dates in Excel. One is a static date. Static date means it's never going to change. So I'm just going to enter in March 23rd, 2021. But if you didn't know this, there's a nice keyboard shortcut. If you press Control and the semicolon, watch this, Control and the semicolon enters today's date. Now it's dead. It's never going to change, but you don't have to type it in. You can just press Control semicolon and that will enter today's date. And it will always be that date. You can also have dates be dynamic. You can have your dates be dynamic. And if you want a date to be a dynamic date, you can either use, many of you probably know, you can use Excel's today function, but there's also a feature that allows you to use, there's also a feature called the now function. These are the only ways to generate dynamic dates. This one pulls just the date out of Excel, whereas the now function pulls the date and time. So you can get date and time this way. But again, the point is that it's a nice way to start the model by laying things out and making sure the reader knows exactly what they're getting into. Now, the next thing that I would share with you that I strongly encourage that people typically don't do either is an executive summary. So often I will say here, guys, most models also do not have an executive summary. You'll notice in the model, I have a separate tab, a sheet called summary. And on this sheet, I'll blow it up a little bit. All I did is I put, you'll notice we're running the executive summary 3 ways: under a base case, best case, worst case. And all I have are things like revenues, EBITDA, net income. I've got some growth rates, some margins. It doesn't matter. I mean, this is whatever you want to put in your own executive summary is fine. But let's talk about this for a second. Most models do not have this, but it's so important. This is so important. I'll tell you why. Because the first thing your client wants to know is, what's the answer? Guys, I've seen this 100 times. I've seen this so often. Every time you ever show somebody a model, the first thing they want to know is what's the answer. So it's really important to have it up front. So I'll say it's the first thing. Oh, let me spell correctly. It's the first thing to show, but the last thing to build. It's the last thing you're going to build because you need to build it at the very end. And I would say include things like whatever you need, things like NPVs, IRRs, revenue, EBITDA, I don't know, ratios, etc. I will say it needs to be customized for your situation. And that's what's key. You need to customize this for your deal, your situation, whatever your team needs to make a decision. So important. And shockingly to me, even very strong modelers often don't do this. So really, really important to make sure that you can show people the answer right up front. Now that leads me to the next tip that I want to share with you. The next of our top 10 tips is this. I wanted to talk about model flow because now I want to get into the next tip here, which is sometimes, believe it or not, a little bit controversial. And I'm going to show you some really powerful Excel skills right now that I hope you like in order to manage this. Point 3 and 4 says, keep the assumptions up front. And then it says, make them a different color, make sure that the inputs in your model are blue. We'll talk about that. You probably know that, but this is the one that sometimes I get some pushback on. So you'll notice in our model, guys, take a look again when I show you the PDF. In the PDF, I've got the cover page. The first thing I'm going to show my client is the answer, the executive summary, because they want to know what's the answer. So I can say, great, here it is. Well, the next thing I've included in this model is the assumptions, and they're on 2 pages. Page 3 is some assumptions. You see, I've got some general assumptions, some product pricing assumptions, cost assumptions. I've got some depreciation assumptions, interest rate assumptions. You get the idea. And then I have another page. I couldn't fit them all on one page. So we have a second page. I've got some assumptions on capital expenditures, working capital assumptions. You get the idea. But the big question is why? Why is this the next thing that I strongly encourage you to include in any model that you ever built? Well, let's go back into our Excel for a second here. I'm going to say many models do not have an assumption page at all. And I will tell you that it's so important because here's why. This is so important. So important because after seeing the answer, what happens next? After seeing answer, the next thing your client wants to know is what? I can hear you. I can practically hear you saying this. They want to know, how did you get there? How did you get there? How did you get those answers? What decisions did you make to drive those answers? Guys, when models don't have an assumption page up front, it means the assumptions are scattered everywhere. And if you want to update the model, you need to go to dozens of different places to update the assumptions. I'm going to look over at you guys right now. How many of you have ever seen a financial model where assumptions were scattered everywhere? All over the model, every sheet, all over the place. You can raise your hands at John. Yeah, a couple of Johns raising your hands, right? Meg, how many of you have seen models where the assumptions were scattered all over the place? Yeah, a bunch of hands went up. Thank you. That's not ideal. It's not optimal because if you want to update the model, you're not always sure where to go. And it's very difficult to use the model as a communication tool. It's really hard to communicate off the model if there's no assumptions. Guys, imagine this, okay? Imagine that I was presenting my model to a client. I showed them the cover, and then imagine I showed them the executive summary. And then the next thing I just showed them was the revenue schedule and then the income statement. They would say, oh, wait a second. How did you get this income statement? What decisions did you make? And we would have to fly all over the place. So everybody, when I talk to people about that, everyone says, yeah, they agree. That makes a lot of sense. If the model is going to work as a communication tool, you want to keep the assumptions up front. Now, I will tell you that it's very easy to build the assumptions if what? If you built a strong plan. If you built a strong plan like we did above, if you planned it and designed it, all you do is you collect your data and you enter it and make it look nice. We put our assumption categories in boxes. I don't care how you do it. Just make sure it's presentable. But I will tell you that some people often resist. We've had people say to me, Ian, I have an issue with that. And here's the issue. Take a look at my screen, please. I'm going to show you a couple powerful tools here. A couple people have said to me, you know, I like the idea, but here's why. Here's why I don't want to keep my assumptions up front. Because if I make a change to my assumption, take a look here. Let's pretend this was the raw material cost. Let's pretend this was a model for Coca-Cola and I had some raw material cost. What's the biggest raw material Coke purchases? That's pretty obvious. Obviously, they buy a lot of sugar. Let's pretend I was using a number of $226 per unit, whatever a unit is. And someone said to me, no, you know what, Ian, I think that should be higher. Let's run it at 250. Okay, so I'm going to make it 250. Okay, done. Good. I made a change to my model. You see that? And now I've entered a raw material cost of 250. But so what? What happened? What did that do to my model? I don't know. If I want to see how that changed the model, I now need to go into the model and go down to the income statement and look down here and see what did that do to EBITDA? What did that do to net income by changing costs? My point is, some people have said they don't like always jumping around in the model. Now I got to go back. I'm going to change it again. Right? Every time I change my input, I have to go back and jump all over the place to see what did that do to my calculations. I get that. That's not ideal. So I want to share with you, three ideas to keep assumptions up front. Here's three ideas to keep your assumptions up front, but see what's happening to the outputs, right? So I'm going to share with you three ideas that other societies around the world have really liked seeing. I'm going to show these to you here. Number one is just to build, very simple idea, build an outputs box right on the assumption page. That's simple. This does not require using a tool. It just means doing something like this, guys. Just do this. Take your, if you find some empty space, then just build a new box here. And you could have things like EBITDA or whatever it is you're looking at, net income, and then just link them, right? Just link here up to the model. So link link to the model, right? So you could see right here, EBITDA, net income. So when you change a value here, you have an output box right on your screen. That's a very easy way to do this. But I want to show you a couple of tools that are a little more interesting. I'm going to show you how to use Excel's powerful watch window tool. This is a great tool. How many of you have used Excel's watch window before? Has anyone used Excel's watch window feature? Amazingly, I find a lot of Excel users don't know that it's here. Only a couple hands are going to go up. I'm going to show you this feature, guys. I think you're going to like it a lot. And where does it live? And then I hope you use it on your own. So it's under the formulas menu and then watch window. Take a look here. I'm going to go to formulas. And then there's a button that says watch window. Now you might be thinking, wait a second, I never saw that button before. Is that new? The answer is no, it's not new, but it never used to live on the menus. Only recently, Microsoft added it to the menus. It used to be hidden. I'm going to show you where it used to be, but now it lives right here on the menu. So take a look. What I can do is click on the watch window. And it gives me this box. Here it is, watch window. It allows me to watch things deep in my model. I'm going to click add watch. And now I'm going to go to my model tab. And I'm going to go down to my income statement and very carefully click on 3 years of EBITDA. That's it. I'm going to click OK and add. And now you see I have 3 years of EBITDA in my watch window. Let's do one more. I'm going to click add watch. And I'm going to go back to my model sheet and grab 3 years of net income and click add again. Now look what's going on here, guys. I've got a box called the watch window, and you can see I have 3 years of EBITDA, 3 years of net income. I could add some debt numbers. I could add ratios. But the beauty is, as soon as I change my operating costs, my raw materials, watch please in my window, all the numbers changed. So now as you tweak the model, play with it, you can immediately see what's happening anywhere within your model. And of course, even as I go to a different spot, if I go to a different sheet, the watch window stays with me unless I click X to get rid of it. Are some of you will some of you try this? Just raise your hands if you're going to try. I'd love to see if you try this. Who's going to try this afterwards? I hope you can use this tool. People who use it find it really simple, very, very helpful. It's just people often didn't know it existed. It's a really nice way to be able to keep your assumptions together, but then also see what that's doing to the answer. So I hope you guys try it and use it and incorporate it to help you get visibility. The last one that I want to show you here very quickly, how do you keep your assumptions up front, but look and see what that's doing to your answers? You can use a great feature called Use Excel's Camera tool. You're thinking, wait a second, I didn't know Excel had a camera to take pictures. Sort of. This is a feature you may never have heard of. I'll be honest. I mean, as I said, we've now run this webinar at about 25 CFA societies all over the world. And very few people had seen this feature in Excel before. So if you're feeling like you haven't heard of it, don't worry, you're not alone. It's not well known amongst Excel users that Excel has a camera. Why is that? It's not on the menus. It's not on the menus. You need to activate it. So let me show you where it is here. Guys, can you see my screen? Take a look at this menu. This is what's called my quick access toolbar. And you'll see I have a button that says camera. You're probably wondering what that was. I'm going to show you how to get that. To get that, you go to the file menu and then you go down to more and then you go options. You go file options. So I went into my Excel options menu, file options, and then I'm going to go to my quick access toolbar. Okay, here it is. Now, on the left are all the features in Excel. If I click on all commands, take a look at this. It takes a minute to load because there's so many. If you click all commands, you get a list of every single feature in Excel. Come here one day on your own. You won't believe all the things. There are hundreds and hundreds and hundreds of features in Excel. Most of them are not in the menus, so you may never have heard of them. I'm still in the A's. I'm just in the A's still. A's. Finally, I get into the B's. There are so many features you may have never heard of. And in the C section, there's a feature called camera. Now, if you click on it and then click add, it will move it to the right. And anything in the right is going to show up in your quick access toolbar. So when I activate it, I have a camera. It's really, really simple. Watch how it works. Let's pretend I wanted to watch or take a picture of my income statement. Do you guys see this? I'm on the income statement and I'm going to grab the income statement. I've selected the entire income statement and I'm going to click the camera button just like this. Take a look. I'm going to click camera and it effectively takes a picture of it. And I have a little crosshair. I have a little drawing tool with my cursor. So I'm going to go back now to the assumption page And I'm going to go to the top here and just click once. And what it did is it's pasted in a picture of my income statement. But this is not just a dead picture. Watch here very carefully. When I once again change my raw material cost to $250 and I press enter, look what happens here. Watch please the income statement. It's all changed. It's dynamic. It's a dynamic picture. So you can take pictures of different parts of a model, paste them up front, and as you make a change to numbers in one spot, you'll see what it's doing elsewhere. Really simple and really powerful. And that's why people like it. So again, I want you to get the best of both worlds. I want you to have the assumptions up front so you can communicate clearly with your model. But here are 3 ideas to allow you to see what's happening with the outputs. Okay. So I hope that makes sense. It's a really powerful element of models and one that we want to make sure is working really effectively. It builds so much confidence when all the assumptions are nicely laid out. The next stage that I want to talk about in terms of model flow, which gets us into tip 4. Well, when I'm talking about optimal model flow, the 4th thing I want to talk about is building a scenario page. Again, also, I'll say many models don't have this. This is also tip number 5. Oh, actually, I should very quickly talk about tip 4, which I just missed. Tip 4 is simple. It just says we want to make sure that in a model, all of our data inputs are blue and formulas black. That's industry standard. That makes sure you know which are the numbers that I can play with and which are the ones that are going to calculate all by themselves. Why do we use blue? Because when you print a model on paper, blue prints really dark, whereas other colors don't always print very well on a black and white printer. So as I get back here, I've done the first 4. We're going to talk about tip number 5 for the next 7 or 8 minutes. And then, as I said here, I need about 15 minutes to go through the last 5 tips, and that'll get us to a Q&A window. Takeaway number 5 says, build a scenario page to avoid multiple versions. This is so important. And I'm going to share with you, many models do not have this. This is one of the most important parts of any model. And I will also tell you that every model should have this. Every model you ever build should have a scenario page. I have personally built, guys, I don't know, in the last 10, 20 years, I've probably built over 100 models. And every single one that anytime we do work with clients, we teach modeling, we always encourage people to build a scenario page. Let's go take a look at it. In fact, guys, it's so important that we often like to build it as its own sheet so we can see it here. Scenarios, take a look. Here it is. Here is my scenarios page. It's not very long. Look what I've got. I've got cost inflation. I've got another variable that is sales prices. And then I have sales volume. That's all that's going on here. I've got cost inflation, sales prices, and sales volumes. So as a starting point, let me tell you that all this page is just, all this is just more assumptions. That's it. A scenario page is just more assumptions. But the difference is this. The difference is for these assumptions, we have 3 cases. And in our model, we built a base case, a best case, and a worst case. So for these particular variables, I had more than one option. Why? Well, I hope this is becoming obvious just by looking at them. Why did I choose to build a base case, a best case, and a worst case for cost inflation or the selling price? Right? Let's say this was a mining company or an oil and gas company. It doesn't matter. Why would I want a base, best, and worst for things like selling price or cost inflation? Well, I can almost hear you saying this, and I hope that you're thinking about this. Why did I build base, best, and worst for these, but not for many or most of my other assumptions? Well, because these ones, the scenarios, these ones are my key drivers. And that's what I want to note, because these ones are the key drivers. This is what we talked about earlier. We did it in our planning stage. These are the most important ones. These are the ones that are really hard to forecast, hard to control. So I want to have more than one possibility. So important. And I want to quickly demonstrate two tools to allow you to build a very powerful scenario page. Guys, one takeaway from this course, I hope all of you go back into an Excel file and build yourself a powerful scenario. I'm going to send you guys, you're going to see this model. You're going to get this model sent to you. So please, please come and take a look at this page. It's really simple. Let's see what's going on here. Well, you'll notice that for every one of our variables, there's a large rectangle, right? For my sales volume growth, I have a large rectangle at the bottom, right? All of them do. Cost inflation has a large rectangle here. This is step one. Step one is to build the large rectangle that has the base, best, and worst. So these, of course, are the assumptions, which is why they're blue. So literally, you just have to talk to your boss, talk to your team, and enter whatever you want to use for your assumption variables. So this is what my base case is for inflation, my best case, my worst case. My client will tell me if they think it's reasonable or not, but this is just your thinking, your inputs. Okay, fine. Then we have another row on top. This row is not blue, it's black, which of course tells us that it's not an input, it's a calculation. Well, this row is the live case. This row is the live case. This is the one that's actually running in the model. This is the one that we're actually using. So the model right now is running this row here, this cost inflation. But you'll notice I have a switch. And if I tell the switch to run the best case, then what happens? Well, I still have my blue numbers here, but the live case is now pulling up the best case. And this is now the one running the model. So now the model is running with best case. Cost inflation, same thing with worst case. So it's a really powerful, beautiful, nice tool that allows you to run different cases. But how do we build it? Well, two things I want to show you. Number one is that underneath my switch, there's a number, just a number, a blue number 1 in a cell. Let's take a look at it. This is the number that determines which case are we going to run. And I can only have 3 options. I've got base, best, and worst. So this cell is a number, starts off as a number 1. So let's look at how do I build the live case, the black case here, the skinny row that shows the live variable running. Well, many people use if statements, or they'll use offset function, which is a lot more complex, or an index function, all of which are fine. These are all fine tools. The if statement's not ideal. The if statement can get very, very long. If I built an if statement here, it would be a very long wraparound if statement. So my preference is to use Excel's choose function. One of our favorite features in Excel, take a look at this formula for a second, guys. One of my favorite tools because it's so simple. All it does is it says, where is your switch? Here's the switch cell in D6. Where's the switch? And then where are the 3 cases? Where are your 3 cases? G14, G15, and G16. These are my 3 options right here. I'm going to move the yellow tag out of the way. So the question is, how does it know? How does the choose function work? Well, the order depends on the order that you enter the cells within your formula. It doesn't care that these cells are stacked vertically. That's not what's relevant. What it does is this. If the switch has a 1, it pulls out the next item that's in the list, so G14. If there's a 2, it pulls this one because it's the second. And if there's a 3, it will pull out whatever's third in the ordering within the formula. So a really powerful tool. You'll notice here, if I type in a 2, now the choose function is pulling out the second option, the best case. And this is the one that's now running the model. And same thing here if I change it to a 3. So very, very simple tool. Clients love it. That's why we use it, because they understand it. They understand it. Listen, if someone has a question, you're welcome to email me about index, offset. They're powerful tools, but not always well understood. And clients are often get nervous around them because they don't understand them. In our slides, when you receive the slides later today or tomorrow, you'll notice that there's a bunch of pages that have modeling skills. And you'll see here a couple slides on how to use a choose function And you'll see a slide on how to build the dropdown that I want to show you as well. Okay. So this is the last thing I want to quickly show you before we move on is this. I've now showed you a really great feature, which is how to run your scenarios with the choose function. The last thing is, how do you build this guy, this little drop-down menu? Because I don't want to leave this number one. I don't want to just, here, imagine this wasn't here. Imagine my switch wasn't here. I don't want my boss or my client to see the page looking like this, because they're going to say to me, Ian, what does that number one mean? Why do you have a number one in the cell? It doesn't mean anything. A much more effective way to create confidence is to use Excel's dropdown. So how do you build one? To build one, you need to go to the developer menu. Okay, does everyone see that? You need to go to your developer menu. But you might be thinking, wait a second, I don't have a developer menu, right? Just by a show of hands, if you're guys, if you happen to have Excel open right now, does anybody not have a developer tab? I'm going to take a look over. Does anybody not see this menu in your spreadsheet? Okay, I see a bunch of hands going up. Yeah. You do have it. Thank you for raising your hands. I appreciate that. You're wondering, why do I have a developer tab and you don't? Because for some reason, the reason that I don't understand, when you first install Excel, it's off. But you have to turn it on. You know, lately I've gotten to know the head of Excel. Yes, literally, there is a guy who works at Microsoft, and he is literally the head of Excel. And I've gotten to know him, which is nice. I'm going to send him an email. I'm going to ask him, why do you make people turn this on? Because it's a really powerful menu. But here's how you do it. The way you turn it on is you go to your file menu where we were before and down to options. Please, file options. And when you go to file options, you need to go to customize your ribbon. Customize ribbon. And on the right side, you'll notice that you don't have a check mark beside developer. It's open. It looks like that, right? So you have to turn it on. You turn it on once, only once ever. You turn it on once and that's it. And then you'll get it. Okay. Did you get it? So now you should have it. You'll always be there. You never need to worry about it. And from developer, watch this, guys. You click insert. Okay. This is all being recorded. This is all being on video. So if you want to watch this portion again, you can. I'm going to go developer. I'm going to click insert. And then I want the form controls. And from the form controls, I'm going to click the second one that says combo box. Watch when I click it. My cursor, again, turns into a little of a plus button. And I'm going to draw. I'm holding my mouse button down and I'm going to draw a drop down. That's it. All I'm going to do now is click on it and go format this control. And it wants to know two things. It wants to know the input range and the cell link. That's it. Input range just means, where are the words? Where are the words? Where's the text that you want to see here? Where's the range of text? And that's C14 to C16. Whereas cell link means, where is the switch? Where is the actual switch? And I'm going to click on that, and that's it. So it wants to know, where's the range of cells, the words, and where's the switch? That's it. And I'm going to click, and then I'm going to click OK. Now I already did that. If you click OK, I'll delete this one. You'll end up with a drop-down menu here. Then you can right-click on it and move it. Okay, you can move it, and what we do is we cover it up. So it's really powerful, because when you run it now, you have your three words: base, best, and worst. It's all it does is, when you click best, the only thing it does is it changes this number. It puts a number 2 in the cell. That's it. If you click on the worst, it puts a number 3. So your boss or your client doesn't have to worry about typing in a 1, 2, 3. They just use the drop down to get it working. Really powerful. And what it does is what these tools do is they invite people to play with your model. It makes them comfortable because they can use it like a piece of software. So that's why we're a big fan. This is a great page. I hope at a minimum, guys, that you all go back and build a scenario page in your own Excel files. Every Excel file can have one of these. You just, again, make your inputs. You have a live case with a choose function and a little drop down, and it can give you tremendous flexibility, and people will really appreciate having multiple cases that you can use to run a model. Okay, so that was finished up best practice number 5, build a scenario page. Let's now spend the next 10, 12 minutes on the last 5 here, or sort of, yeah, on the last 5, these are really important, but I don't have any technical demos, so I can do them quickly. Okay. Number 6 is an interesting one. It says, build your financial statements vertically. Let's take a look here, guys. When I go into my model sheet, if I go to my model sheet, you'll notice I actually built a lot of things vertically. I have my revenue, I have my costs. Underneath my cost calculation, I have my income statement. Underneath the income statement is the cash flow, and then the balance sheet. So my recommendation is that it's optimal at a minimum to keep your financial statements oriented vertically. People often just don't think about doing that. It just wasn't intuitive. Many people have all their financial statements on different sheets. Can you guys, I'm going to look over. Has anyone ever seen a model where every statement was on its separate sheet? So you had an income statement sheet and then a cash flow statement sheet. I'm looking over, and a balance sheet tab, every financial statement on its own tab. Yeah, Willis, thank you, right? Maria, I can see you raising your hands. Thank you. Let me be very clear. That's not wrong. It's not wrong to do that, but it's also not optimal. It's not optimal because what happens is when you have your financial statements on different sheets, I promise you, it increases the probability of errors because now you have to link back and forth. And whenever you have to link to different sheets, it increases the likelihood that you might link to the wrong spot. We see it all the time when we help people fix their models. What do you know about every set of financial statements in the world? Every company in the world, the financial statements talk to each other. Look at this, guys. Watch this, please. Income statement starts with revenue. You know this. And of course, it ends with net income. I'm not telling you anything new, but watch this. The cash flow statement always starts with net income. So look how simple that is. Look how easy it is. I just link it up. I can see it. I can visualize it. I don't make any mistakes, and I know it's working. It's like a little waterfall. Everything works down the page. What about depreciation on the cash flow statement? Well, I'm just adding it back right up above me from the income statement. Very, very simple. Same thing with my non-cash taxes, deferred tax. It's all just staying vertical, very easily linked. Cash flow statement ends with ending cash. You see this? The cash flow statement ends with ending cash. And the balance sheet always starts with ending cash. So everything just works its way down the page. So my point is that if you think like this and you try that, I've had a lot of people convert into a more vertical approach, and they usually love it because they say, wow, it's so easy to check, to link, and to make sure things are working. So I would encourage you to think about that, because it's a really nice way to get them working. Again, if you build them all on different sheets, it's not wrong, but it's faster and it's avoids errors more if you keep at least your financial statements vertically. It just makes it a lot easier to check and audit. Okay, so that's number 6. 7 and 8 I'm going to do together, and then I'm going to do 9 and 10 together. 7 and 8 say, don't do any work on your financial statements. That sounds like a funny statement, doesn't it? Don't do any work on the financial statements. Can I tell you, this is one where people get into trouble all the time. When we run courses on how to build models, we teach this. We tell people don't do their models, don't build big formulas on the financial statements. But occasionally people do it their own way, and then they struggle to get their models working. I have had so many people email me over the years late at night. Often people email me. I don't know why. These emails usually come in at 2 in the morning, and they usually just start and they say, help. They say, I took a class with you at one point. You offered to help if we have any problems, which we do. We're always happy to help people if you have any issues with models. And they'll say, I can't get it working. The balance sheet's not balanced. Nothing's working. Can you please take a look at it? Okay, we're happy to do that. Usually we discover, the first thing I look at is the financial statements. And usually I discover big giant formulas right on the financial statements. We don't want to do that. We're going to build our work on schedules. What I'm talking about is this. Let's take a look. If I go back to my income statement, guys, watch this. If I go back to my income statement and I click on revenue, I don't want to see a big formula here. Look what I see. When I press F2, if I edit my revenue, all I have is a link. It's one simple link. And it's such a nice link. Do you know why it's a nice link? Because it's on the same sheet It's in the same column. Look, it's in column K. I can roll up and I can see, aha, I'm just linking it to the bottom of a revenue schedule. So simple. What about costs? There's no big formula. Look, there's no big formula on my cost of goods sold. It's just a link. So what happened is I first built a schedule, and then once I got my answer to that schedule, I linked it into my statements. This works for any model you will ever build. Same thing with depreciation. I'm not going to calculate it here. There's a schedule. It happens to be down below. So this leads me to one of my favorite mantras. I have two favorite, my favorite modeling sayings. I have two favorite sayings that I use when I talk about models. Number one, I like to say is build it, then link it. Build it and then link it. And what that means is this. It means build a schedule, then link it into the financial statements. Guys, if you can even just do this, if this is the only thing you take away from today's webinar, is you stop building big formulas right on financial statements and instead build a little schedule and then link it in, that alone will make your models so much easier to read, to understand, and for others to have confidence in. There is no work on my financials. Now take a look. Obviously things like EBIT, yeah. Operating income, that's just A minus B. That's EBITDA minus depreciation. My net income, of course, is earnings before tax minus income tax. Yes, of course, I can have little teeny subtractions or additions, but there is no big formulas. If I need interest expense, it's going to come from below, obviously from a schedule. So these tips are critical. Do not do any work on your financial statements. Do all your work on schedules. And for any company you're modeling, guys, all you do is say, what's the line item on my financial statements that I need? I'll build a schedule, then link it in. Then I build another schedule, and I then link it in. The last two here, and we'll be right on time, is this. When you're building your schedules, you want to build really simple formulas on your schedules. And I'm going to share with you an idea. How do we do that? We repeat our data. Build very simple formulas. I never want to see big, giant formulas. Even on, so let's go to my revenue schedule. This could be any company in the world. What we've done is we've first forecasted selling prices. This is a company that has one product and one price. So they're very simple, but it's the same idea for any company. There's a product, there's a price. And of course, if I've got my sales price and a sales volume, then my revenue is just going to be price times volume. That's very easy. But what I really want to show you is this. Like a lot of companies, our company, Henderson Manufacturing, has a gross selling price, and then they have to deduct certain costs like freight and warehousing to get down to a net selling price. So my net price is just the gross minus the freight. But what I did is I repeated the gross. The gross selling price was an assumption. It lived on my scenario page. It was right here. So instead of linking back into a big formula, I simply repeated it. These purple cells are what we use to indicate assumptions that we are repeating. So the purple cells here are assumptions that we have repeated. So I can see, aha, this was an assumption, but I'm showing it again. I'm just repeating it very simply. Same thing with inflation. I'm repeating it. Now look, to calculate my freight cost each year, look at how simple that is. It's just the previous year times 1 plus my inflation. That's so easy. Your boss will understand that instantly. And my net price is just the gross minus the freight. My point is, when you get this model, please go down cell by cell. You'll see how simple it is. I've repeated, and we build little simple formulas all the way down. I'm never going to build a big, giant, crazy formula that links to a bunch of sheets because that's not optimal. The very last thing I want to show you here today, and then we're going to stop on you about 1 more minute, and then we'll break for questions, is this. Guys, has anyone ever seen a formula that looks like this? I'm going to build a crazy formula here. It makes no sense. I'm just going to do this. I'm going to take a number on one sheet, just some random number. I'm going to divide by a number on a different sheet. Who cares? I'm just making this up. It's just garbage, but I'm making up a formula here. I'm going to multiply it by something on this sheet, and then I'm going to add in something on this sheet, whatever. It doesn't matter. It's just some random silly formula. Okay, who cares? Has anybody, my point is this, has anyone ever seen a formula that looks like this, that's linking to cells on a bunch of different sheets? Just raise your hand if you've ever seen formulas like this that link to cells on different sheets, a bunch of different sheets. Yeah, a lot of hands going up. I'm not surprised. Can I tell you what I call this? This is a disaster. This is a disaster because it's extremely difficult to read and understand. You'll never see formulas like this in our model. I would never do this because it's really, really hard to make sure it's working and it's hard to audit. So what do we do instead? Repeat, 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 and life will be so much easier. What do I mean? Add some rows. They're free to add. Add a row, and I'm just going to repeat that first cell. And then I'll label it. I don't know what it is, whatever it is. I'm just going to label this first thing. I'll label it. I'll put in a few labels here, and then I'll get down to a calc. So what we often do to fix people's models is we'll take crazy formulas, repeat a cell, and then I will literally unpack this one, and I will repeat that guy. I don't know, whatever it is. And then I'll repeat this thing here, whatever it is. And then I try to recreate the whole thing. So now I should be able to build it, but instead of it looking like this, now what I should be able to do is take whatever this is, divide by this, multiply by that one, and then add in this element on our own sheet. And of course, I got the same answer. So much more effective, so much more powerful. Do you know what's going to happen now? It's easy to audit electronically, and it's easy to read on paper. If somebody just saw a PDF of this, they could understand how you got this by reading it on paper. And that's the message. So guys, we got about 10 minutes left, but I wanted to just stop now. I'll ask Julian to join me back and we'll see if there's some questions. I hope you've come away with some ideas and tips. And so I'm just going to share my point here. My second favorite modeling saying is repeat and link. Repeat and link, which means first repeat every assumption and then use in formulas. And what I told you and mentioned is that if you can think like this about your spreadsheets and your models, if you can think about making sure your models work really well effectively electronically and on paper, they will be very powerful communication tools. You will elevate your own skills and the confidence people have in you, and you'll be able to make better decisions. And really all it comes down to is trying to think about some of these key ideas. So I hope it makes sense. Julian, are there some questions that people had that we can talk about for the last 7 or 8 minutes here?
Yes, we have a lot of great questions coming in.
Okay, I'll try and take them quickly. But guys, if we don't get to all, we'll stay a few minutes late as well. If you have to drop, that's fine. We'll stay a little bit beyond 1:30. If you want to get to some, if we don't get to it, just email me. You'll get my emails here, and I'm always happy to chat. But let's go through a few.
Awesome. Our first question comes from John. So the question is, I noticed your model is on a fiscal calendar year basis. What is the best practice for forecasting at quarterly increments?
Great question. Love the question. This is an annual model. John, one of the questions that we always ask when we start a new model, one of the questions that we always ask is, what's the appropriate periodicity? And periodicity means what timing should you be forecasting? Quick show of hands. Has anybody here had to ever do a monthly model? Has anybody here ever done monthly modeling before? You can raise your hands. Has anyone ever had to do quarterly modeling? You can raise your hands. Quarterly, monthly, right? Can I tell you something? This is one of the most important questions you ask in the initial stage. I think I even have it here, right? What timing, right? How many time periods should be in the forecast? We always ask this. So often a client will say, you should model that monthly. And we'll just say, why? Like, why? And one of the most common answers we'll get is, oh, I don't know. We've always done it that way, right? That's my favorite answer. We've always done it that way. That's not good enough. Listen, if a client wants it monthly, we'll build it monthly, but we need to understand the purpose, and we want them to understand the purpose. So it's a great question about period. So let me put a note here on model periodicity, because you can have model periodicity. Let me see if I can spell it. Periodicity just means having multiple time periods in one model, because of course, anyone who's ever modeled quarterly or monthly, you always roll it up into annuals, of course. I've never seen a model that just has quarters or just has months. We always roll them up into annuals. So the problem is how people do this. And I'm going to show you a way that's less optimal and more optimal. This is going to be the less optimal. This is the less optimal approach to quarterly modeling, okay, is to do this. Has anyone ever seen, you do Q1, people will do this. They'll say Q1, and then they'll say Q2, right? And then they'll have, you know where I'm going with this. Sorry, wrong key here for a second. People build this all the time, Q1, Q2, Q3, and then Q4. And then what's next? I can hear you. What's the next thing people put in their models now? Exactly. Annual, right? How many of you how many of you have seen this before in models? Raise your hands if you've seen a model where it goes Q1, 2, 3, 4 annual, 1, 2, 3, 4 annual, right? Of course, or if it's monthly, people do Jan, Feb, March. Has anyone ever seen this before? Has anyone ever seen a model that was Jan, Feb, March, and then a total Q1, and then April, May, June, and then a Q2, and then a Q? Okay, you know what I call this? A disaster. This is a disaster to model this way, because it's always a problem. It's always becomes a big problem when every fifth column or every third column has to do something different. Because I can't build a formula here, right, guys? I can't build a formula here and then just drag it all the way across, because the fifth column has to do something different. It has to, well, on the income statement, it has to sum up these four. On the balance sheet, it just has to equal Q4. So this is where people get into trouble. When people model like this, they get into trouble. So I'll show you what our recommendation is. More optimal approach is to just do this, is to have a quarterly sheet. So I would say you'd have a quarterly tab, for instance, where you do Q1, 2, 3, 4, and then 1, 2, 3, 4, just your quarters, 1, 2, 3, 4, 1, 2, 3, 4. That's it. And then on an annual tab, or off to the side, or off to the side, you consolidate to annuals. And that way formulas are consistent. So I don't have the right answer for you, John, as to what's the appropriate timing you should use. It's whatever you need. Some models do 1 year monthly, and then everything beyond that is annual. That's your call, but just push your clients or your team to make sure that it's optimal. But this is the best way to model. Oh, but you're saying, I can hear you practically through my screen. You're saying, yeah, but my boss wants to see this. My boss wants to see it looking like this, 1, 2, 3, 4 annual. So my thought here is then build a summary sheet. Build a summary sheet that displays whichever periods you want. So then you can do, right? You can do Q1, 2, 3, 4 annual on a summary sheet. That's fine. Your summary sheet can look like this, but it's not optimal to actually model this way. I'll build a summary sheet, whatever my boss wants it to look like. I'll use lookup functions and other tools to build it. But this becomes very problematic when you actually build the model this way, because it leads to lots of errors. Okay, so I hope that made sense. Let's keep going through a few more. Maybe we'll go, another 5 minutes or so if people are able to stick around. That was a great question. Took a couple minutes, but I think that's probably relevant to most people here who build models.
Awesome. Yeah, a lot of great questions coming in. So our next question is from another John. It's kind of a three-parter, so maybe we'll just answer a piece of this, or I'll leave it to you, Ian. So the question is, do you advise using named ranges, Excel VBA for certain functions? What are the best ways to review a new model?
Okay, named ranges. So let me talk about the 2 and 3 very quickly here. Second one was on a VBA, and then skills to review a model. I'm going to go in reverse order, John, if that's okay. Skills to review a model. So powerful, so important. I'm afraid all I can suggest is this. Love to come back. It's a whole webinar. We have another list of some of my 10 favorite tips just to check and review models. Now, we literally just did this, I think, for CFA Society Saudi Arabia. And I only tell you that because, and we've done this for a few other CFAs. We've done topic 1 all over the world, and we're starting to roll out topic 2 at a bunch of CFA societies. They might have it live on there. So if you really want to see this webinar, it might be live on the CFA, some other CFA societies. Who else did we do it for, Julian? Beyond, we did it.
Germany, Toronto.
Yeah. So they've all posted on their websites because we're rolling this one out around the world. I hope to come back and show this one, but it takes, again, about an hour or over an hour to show you some of our favorite skills to check. It's its own skill set. It's its own discipline. So I'd love to come back and do that webinar with you guys. There's a lot to it. Simple tips, but powerful. As to VBA, our recommendation is be careful. We teach VBA. Here's the thing. It's funny. We always talk out of both sides of our mouths. We'll teach courses on VBA and then we'll encourage people not to use it. And we're kind of half joking. It's a really great skill to know, but I would encourage you to minimize it in your models because your models are going to get reviewed by clients, by bosses, and often people get very uncomfortable when there's code, when there's VBA. So you'll notice I've used some VBA here in my Excel just to put colors in. I can change, right? I can apply, I can do things like change colors quickly of my cells. I'm just using VBA to do that, but it's not attached to the model. It's just part of my toolbar, and that's fine. Just be careful using it in the file because it can really make people very nervous. Unless everyone on the team is truly proficient with it and how to debug it, I would be careful. But I do think it's a great skill to know. And then the final one is the use of named cells. Named cells, I'm neutral. I'm completely neutral on using named cells. Here's why. I often find people use naming to get around another problem that I just talked about. Okay. You remember that one of my tips that I shared with you, one of my favorite sayings is repeat and link, repeat and link. So I'll show you in the model. What we did is I said, if you want to build a formula, then repeat a cell, and then build a formula. It's really simple. And then same thing. This formula is very simple. Do you remember, when I showed you initially, this formula and it was linked to 4 different sheets, right? Whatever I had done, I'll do something again crazy. Very often people will build formulas like this where they're linking to a bunch of different sheets. I don't know what I did. I'm just going to make something up again. And then I think it was close to this, whatever, who cares? But what happens is this. People often build big formulas like this and then they go, ooh, that's going to be really hard for my boss to read and understand. So what they do is they say, I know my client or my boss is going to have a hard time reading this formula. So instead of seeing these cells, what they'll do is they'll go back to these cells and they'll name them. I think this was a cell I took here, summary, I11 here. So they'll go, this is the name box here. They'll call it, I'll name it for me. I'll call it Ian, whatever. So they'll name this cell. So instead of it being called I11, they'll call it whatever, or they'll call it tax rate, or they'll call it sugar cost. And then in the model, instead of linking to this cell, they'll link to, you'll see I have this name because I made it now, it's Ian. There it is. And I should get the exact same answer. So they think it's a lot easier for the client or their boss to say, okay, what do? We take Ian cell, divide by whatever tax rate, and they can read it. My point is, if you repeat all these cells going into the formula, you don't really need to as much because everything's so clear and it's labeled. So I don't have a problem with naming. If you like it, go ahead. But I think you will realize you don't need to name a whole lot if you follow this discipline of being more conscious of repeating and building simple formulas like that. So I again, love the question. We get it a lot. So that's why I wanted to spend a few minutes taking it up. Okay. Are there a couple we can do quickly here, Julian? We still have a lot of people. Most people are still on the line. So I guess, which is great. Is there a couple more we can do quickly before we let everyone get on with their day?
Yeah, so we really only have 1 or 2 more. So I think what we were just talking about ties into Yubo's question quite nicely, which is when we use nested if formulas, how do we make this more simple?
Yeah, well, I will tell you 95% of nested if formulas can be avoided and replaced with something else. So as an example here, this is a classic spot where people use nested ifs. And we said, let's not do that. Let's use a choose instead. How can you avoid long nested if statements? You can use a choose function. You can use VLOOKUP. You need to understand some of Excel's tools. You need to know how to use, let's say, a VLOOKUP with a true instead of a false at the very end. Again, if you want to talk about this in more detail, just shoot me an email and I can talk through some examples with you. But I will tell you that 90% of the nested if statements that we have ever seen in spreadsheets can be avoided. It's nothing, there's nothing wrong with them, but they get long and they get hard to check. So I prefer something simpler if possible. And there usually is a simpler option. Okay. You want to do the last one then and we'll wrap it up?
Awesome. Yep. So our last question is from Christopher. The question is, in your opinion, are Python and Excel compatible or mutually exclusive?
I love the question. We've been doing a lot of, I'll do that one, trying to do quickly. I will try and do that very quick. Python is the hottest, newest skill that's being used by finance professionals through the training firm that I told you that that I had started, and we run training courses around the world. We're now teaching a lot of data science and a lot of Python, and they are compatible. They work together. In a nutshell, if you're interested, shoot me an email. We just put out a newsletter last week, and we talked about Python and how it's in a very practical finance-oriented lens. We talked about how Python's being used by finance professionals. Finance is often taught by data scientists, which means it's hard to understand how you would use it. There are really only two major buckets of how people use Python. One is if you have too much data that will fit in Excel. So let's say you were looking at raw data and you had 1 million rows. Well, you could do it in Excel, but it gets really slow. With Python, you can treat it like a spreadsheet, but it can have millions and millions of rows and it never gets slow. It's incredibly fast, but it doesn't have the same visual user interface as Excel does. So people are not going to use Python. They're not going to build models, I don't think, in this way in Python. They're not going to, if you have to analyze 20 or 50 rows of data, there's no point using Python. Excel is great. But when you get into big data, monster volumes, that's the first major usage of Python, is monster volumes of data that you can use analysis packages like in Excel to crunch your data. And then the second usage of Python is to do things that Excel can't do. There's a lot of things that Excel can't do, like scrape websites. As an example, if I needed to know a list of every single Home Depot store in the world or in the United States, what a lot of people do is they go to the Home Depot, website. And let's say you wanted to put them on a map. You wanted to get all the Home Depot locations and then map them. Most people would go to the website, click on each location, copy and paste it into a spreadsheet, and then build a map. Well, I don't know if you know, but there are just over 2,000 Home Depot stores, in the United States. How long would it take to build that? Oh my gosh, that would take hours, days. In Python, I can do that in 5 minutes. In Python, I can write some script to go to the Home Depot website, download every one of the store locations. It's accessible. It's available to anyone. Dump it into a spreadsheet first dump it into Python. You can move it into Excel if you want, but either in Python or Excel, I can map it. The whole thing can be done in 5 minutes. And if Home Depot shuts some stores or adds new ones, you can have the code checking every week and automatically updating it. So there are some things Python can do that are incredibly powerful that Excel can't do. And there are also things that it can do, as a bigger version of Excel. If you want to talk about that offline, check out, just email me or check out our Marquee Group website and you can see some of our Python stuff. It is really, it's going to change the way people work, but I don't think it's going to change models a whole lot in the short term anyway. So thank you guys for those really great questions. I'll turn it back over then here. We've gone a few minutes over, but you had some really great questions. Most of you have stuck around, so thank you for doing that. I look forward to seeing some of you again. I'll tell Kathy, Aaron, if you guys have anything to wrap up, I want to thank both of you again and the CFA Society for having us in. It's been a real pleasure to be here and to deal with some of these great questions. I don't know if you have any final comments that you want to share before we wrap up then. Aaron, did you have? Yeah,
just a couple. Thank you, Ian and Julian, and thank you to everyone who's connected with us today. Please be on the lookout for an event survey to follow, including the audio and meeting presentation. I hope you all have a great rest of your day.
Thank you, Aaron. Thank you, everyone. Great to meet you.
Thank you. Thank you, Ian.
Thanks, Kathy.
Bye-bye.
Take care, everyone.